a report on capital flight from Africa. It defined capital flight to also include those arising from corruption, and estimated that corruption accounted for about 20 to 25% of total capital flight from Nigeria, while transfer pricing accounted for around 45 to 50% of total capital flight from Africa. And since then, various governments have shown keen interest in promulgating transfer pricing regulation in their various jurisdictions. And simultaneously, last year, July and August, respectively, Ghana and Nigeria also instituted transfer pricing regulation. As at the moment, we have about 18 countries that have transfer pricing regulation, compared to about 5 years ago when we were just about 2 or 3. And we expect this to continue because we have been studying what is going on in Africa. And the objective 5 were listed in the regulation, but essentially I normally draw attention of people to the first 2, which says it is to defend the nation's tax base. It's also a tool to prohibit tax evasion. And let's just also pause here in it. The Nigerian Tax Authority at the federal level, part of their compensation is based on what they collect. And the money is paid to them on quarterly basis, on current year basis. Not even at the end of each quarter, they check what they have collected and they collect a percentage of it. So the man is looking at this regulation from 2 perspectives. Like one of them has told us before, to help federal government meet their budget, and for him to also meet his own personal budget. So he's very happy to have this regulation with him. And the scope covers all connected taxable persons. Now, this is also a mischief in the regulation. The word connected taxable person is not defined. Very loose definition. But it says it's going to rely on every definition that is found in every regulation or not to define what is meant by a connected taxable person. So a connected taxable person or related party, they are used interchangeably. But along the line, it defined that an associated enterprise is a type of connected taxable person. And the regulation defined an associated enterprise as where there are 2 enterprises to be considered to be associated, where an enterprise participates directly or indirectly in the management, control, or in the capital of the other. Let's take note of the words used. Participate in the management, control, or in the capital of the other, or the same person or persons participate directly or indirectly in the management, control, or in the capital of both enterprises.
Transfer pricing essentially just the price at which related parties transfer goods and services. When we talk of related parties, it's also not defined in the transfer pricing regulation. But 2 parties can be assumed to be related if we have a person that is participating in the management, control, or the capital of 2 companies, or one company is participating in the management, control, and the capital of the other. So essentially, that's what transfer pricing is all about. How the goods, services, tangible and intangible properties are traded among these 2 entities. Taxman wants to be sure that the financial statements that are prepared and presented for tax purposes show a true and fair view of the financial position of the company. If a transfer pricing legislation is in place and the company has complied, then which means they can rely on the income figures, expenditure figures that are shown in the financial statement, which means that's reflected what has happened between what is deemed to be at arm's length. That the profit has not been underreported by shifting it to a related party, or the expense overstated by also shifting it to a related party.
So transfer pricing, basically, it's a new concept in Nigeria but it's a pretty old concept globally, especially in most of the advanced countries. And as we explained during this presentation, it has to do with the pricing when related parties transact business. For example, when they buy or sell products amongst each other, or provide services, or they license intangible property to related parties, or make loans. So that's basically what transfer pricing is. Globally, transfer pricing is based on a concept called the arm's length principle, so that it's a global standard that almost every country that has transfer pricing legislation adheres to. So although it's a new concept in Nigeria, it's been around for a while, and we all follow what we call the OECD transfer pricing guidelines to provide us guidance as to how to comply with most of the legislations locally.
Again, we've always got to look at these things in the context of where we are and where we're at this point in time. Nigeria is going through hopefully a very rapid development process. That development will take place on the platform of joint ventures, on the platform of partnerships, on the platform of working with other organizations globally. There's no doubt about it that we can't do this thing on our own. To achieve the level of growth that we are seeking, we have to do it in partnership. Now, if that's going to happen, then it makes sense that regulatory framework is put in place to continue to protect our economy. So if I have a partner abroad and we begin to have these cross-border transactions, we want to ensure that there are processes in place to ensure that unnecessary funds do not go out. As the speaker had said, he said, the issue about transfer pricing accounts for anything from 45 to 50% of capital flights. And these things are sort of hidden in various ways. So the point I'm really making is that it is a timely subject matter. It makes sense that it should take place, that we should pay attention to transfer pricing issues. It is something that's going to protect our economy and something to help to also encourage the necessary discipline we require as we move further on in our own development. The whole idea of fiscal responsibility, the whole idea of paying attention to paying your taxes, the whole discipline that is required to ensure that you are working within globally acceptable practices is something that we need to follow. And I think it's also pleasing that Nigeria seems to be ahead of the game. Whilst transfer pricing is a cross-border issue with some countries, we are trying to make it a national issue as well as cross-border issue. So I think it's a good idea.